Hello, welcome to the Economic View. I'm joined as always by Evan Lucas, our market strategist. Hi, Evan.
Hey, Tony.
Evan, wanted to talk about confidence today. We've had some data out on business confidence and now on consumer confidence, showing some interesting trends. So let's have a look at that, starting with the business confidence data out.
Yeah, trend is still the same also before we go directly into business. The gap is still quite wide between what business sees and what consumer sees. But let's have a look at business conditions, which is one part we don't get from consumers. Business conditions hit another record. NAB were pretty strong on saying why. They certainly suggested that the outlook for growth in the global economy is certainly part of it. The outlook for the current scenario around particularly exports is building, so all of that's there.
We did see a bit of a dip, didn't we?
Yeah, confidence dipped. Dipped away again, went down to about 9. Still very much on the expansion side, so don't get me wrong. They are more confident. There is a little bit of impact coming from a few areas. Geopolitical part of it was certainly there. Sort of slowdowns in consumption were also probably a concern on the discretionary parts of their research. But in the main, business is pretty excited by what's going on, and they clearly point to one of the what is an extraordinary amount of growth in employment. Their survey is suggesting that 2017, not only was that a record, but 2018 could pick that up and keep going and could print it as well. So business is very confident on spending, and you saw that as well. The other thing is that they were showing was that their future intentions in capital expenditure is well up. So hasn't come through in the ABS data, but it does suggest something interesting. NAB very much put the caveat that they sometimes see an overestimation there, but they do tend to see that they're probably within a 10%. So you would expect non-mining parts of the capex numbers to pick up over the next sort of several estimates when they come out over the next 4 to 8 months.
So business confidence, slight dip, but still strong. And now we're going into the consumer confidence data, which came out today, and that's showing still, reasonably good confidence.
Yeah, mixed results again. You're right. You've got to put out there, it is in optimism. It is confident. It is building. It's 4th consecutive month that we've actually had optimism on the read rather than in pessimism. And we're only around about 2 points away from a 4-year high. So that is good. There is no doubt, looking at the optimistic side of the survey that Westpac put out, people are picking up on employment. They are feeling more confident about employment and their prospects for employment. However, at the same time, their unemployment theory that you're going to filter through to the possibility that unemployment is going to fall is actually really pessimistic. Bit sort of not what you'd expect to see. This is why it's mixed. But people's current scenario around their personal finances is really pessimistic, and it has been for ages. It hasn't really moved, but it is up. So it's gone from really, really poor this time last year, 76. So that's almost 25 points away from even, to 86. So it's moving up. Still very pessimistic. But when they ask them about where they see their personal finances in the future, in the next 12 months, it's really optimistic. So there is clearly a change coming through in confidence, and people's consumption confidence is there, and they believe that things will get better. The economy is going to filter through to them, that their employment will hold, etc., etc. What they're not that confident about, which is interesting, is the share market and the economy. They think that it's going to moderate and possibly ease off, but also housing. And I think this was probably one of the more interesting things, is that they believe dwelling and housing growth is going to slow quite dramatically in 2018, that particularly East Coast is going to slow down, their capital appreciation isn't going to be as strong, and the housing market won't be as sort of a boom area for them. So I think that should be seen, considering what we've been seeing in East Coast appreciation in housing, and we've known that. And I think that's now filtering through into confidence as well.
Yeah, I guess no surprises there, because the markets have been more volatile of late, and we've also seen housing prices come off in some areas, and likely to see that. And so I suppose people quite rightly, are probably a little bit concerned about those things. But let's move into that housing data also, which just came out. What are some of the things that came out?
Yeah, and it's a good segue into that. So the ABS and APRA released data around housing loan growth. Housing loan growth has been changing and moderating. So owner-occupier is still moving okay. It's slowing, but it's still moving okay. investment loans are falling and falling quite dramatically, which the RBA will be quite happy about. They should be seeing that. But if you couple that with the ASIC data, it's quite interesting because the interest-only loans, as we all know, are slowing down, and they actually are falling off a cliff. So the decline in the month of January was 15.8% in interest-only loans. And as we were talking about before we came on air, that everybody that is on an interest-only loan is starting to get a tap on the shoulder from the bank saying, do you want to come across to P&I? And principal and only is ticking up, not hugely, but it is ticking up. The data also showed that there's a modest increase in value, but it's slowing dramatically. But if you look into the data, as I said, interest-only and investment value and also take-up is falling dramatically. So not surprising. It's probably a good thing. It takes a bit of risk out of the market because interest-only and investor loans are either driving property prices up or putting some risk into banks and also into yourself. So that's a positive, but it does suggest that the housing boom, 2013-led housing boom, not only is it slowing, but it will moderate to a point that's there. The caveat and the positive to finish on, the first home owners are now at their highest level they've been in 4 years. So first home ownership is ramping up, and it has been, and that would probably be due to the fact that they've been seeing prices moderating and coming off. So that's the positive. First home owners are getting in, but things are slowing in that whole market.
Yeah, always good to see that obviously any decline in prices, in a region will bring out new buyers into the marketplace and create some demand, which is a good thing. So if there's one element to be positive on, that's probably it.
And it does show that there is that shift now, that the demand for housing will still be there, but it is giving other parts of that cohort an ability to enter.
Thanks very much, Evan.
Thanks, Tony.
Thanks for joining us on The Economic View.